Okay, so we are going to start now the lab exercise. This is going to be a two-part discussion and presentation. The first, we're going to answer any final questions that anybody has about the one that's due tonight, and that is the budget worksheet. And then we will move into the example that I'm using as we go now into the second lab, which deals with expenditures. There was a question that was asked with respect to the topic paper, and I will have that information, the revised assignment, to everybody tomorrow. I've been reading on this and working on this. The assignment that you're going to receive is going to be far less involved than what was originally presented in the syllabus. Just to let you know, it's still going to, yeah, okay, don't get excited just yet. But it will not be as voluminous as that one, mainly because while I appreciate that they want you to use scholarly work, looking at the structure of this class, trying to incorporate articles from everybody into the course discussion and lecture was not something that I was terribly excited about. I know y'all would do a great job providing work, but I would have to, from a work standpoint, I'd have to have the time to read everything. So I think we can move forward, and I will provide a rundown of what the revised assignment will be, and I look forward to everybody's work, and I'll be happy to answer any questions at that time. So let's go ahead and get started with the lab assignment. So we're looking again, this is the lab assignment 1 base worksheet. There were some questions with respect to rows 5 and 6 that I wanted to answer. And I think the questions had to do with just understanding what I meant by the assumptions. In this particular case, you have sponsorships. This is row 5, sponsorships. Obviously, and I got this with several of the questions, several of you had followed what we had talked about, I think in the first discussion of the lab, about looking at the projections from prior years. And when I gave the instructions, I did not do my best to incorporate that in there. But when you're dealing sometimes with revenues, there are those revenues that you can kind of base off of projections from prior years, and then there's ones where you kind of have to go with more current information. So in this particular case, we have the sponsorships, and the assumption is that there's going to be no additional revenues that are expected in 22, and that the fiscal year 23 should be half of what we project 22 to be. So when we're looking at doing the projection for 22, the first thing we want to look at is our year to date, which is in column K. And as you can see, column K has a revenue of $19,978. So that is greater than the adopted, and we don't expect any more revenues this year. So our projected to simply be what our year to date is. So you would just go to column M, the projected column, and type in equals, cursor back to K5, hit enter, and that's your projected. Your FY23 now is going to be half of this FY22 projected. So you go to column N, equals M5 times half, which is 50%, so times 0.5. Enter, and that gives you your revenue recommendation for fiscal year 23. The next one on rents, it says here that fiscal year 22 year to date reflects 65 of revenues for the full year, and we project similar performance in 23. So again, we look at our year to date, and we see that it's at $65,764. We go to M, and we equal K5, And when we're doing a percentage that this is 65%, we need to find out if K is 65% of what the total should be. Instead of multiplication, we use division. So it's K6 divided by 0.65. And that gets us the revenue estimate, which is 101,175. We project similar performance in 23. You wanted to round it, you could round it to say 100,000 or 102,000, or you could just equal it to M6. And for me, I would just type in negative $100,000 because it's a revenue, because it's similar to the actual, which is the projected for 22, which is 101,175. Had a question about row 31.
Professor Hunter.
So wait.
Yes. Yeah,
ahead,
yeah, Jack. Okay, Jacqueline.
So, one thing about this one, and I was just sort of wondering as like a matter of principle, when I was doing this, I decided that instead of doing an exact division, I was just going to go with 100,000, since that was roughly that 65,000, whatever the amount was roughly 65%. And I thought it would be okay because if you're rounding down, or like if you're going lower, if it's a revenue, then that would be okay.
That's perfectly fine.
Okay.
That's perfectly fine. My goal with this is to see that you're going through the process, and then if you want to make those kinds of decisions, you're welcome to. That's perfectly reasonable. The goal is that, I mean, if you come back to me like saying 70,000, then that would be off. But if you're saying 100,000, that's perfectly reasonable.
Okay.
Okay. Yes, Darlie.
So you would round down and not up? Because what if you just put the 101K?
You could round down to 101 if you wanted to, but you would not round to like 102 because you don't want to over project. Okay, let's go now to row 31.
I think there was a question from Carolyn on row number 4.
Okay, I've got that. Let me do row 31 first, and I'll go back up to row 4. But thank you. Adjust to reflect prior year performance. So in this one, this is where I'm asking you to look at it, and you can see in the prior years there was only $87.00. They've only spent $48 this year. So there's not enough information here to just do a 3-year average. So you kind of have to work off of the information you have, and then in this particular case, you would add a little more, not a lot more, but a little more. So my suggestion for both fiscal year 22 and 23, and again, this is where I'm not looking for the exact answer, I'm just looking that you've thought through it, would be to say, you know, if they spent $87 in 19, they've spent $48 this year, we're 6 months through, I can assume that they're probably only going to spend about $100 in the current year. So I'm going to type in 100 in the projected, and I can either keep it at 100 for next year, or I could say, you know what, I'm going to give you $200. I could do it either way, but I'm just going to leave it at $100. And what that shows is that you've adjusted it to reflect that prior year performance. So now let's go to
have to have the formula, Professor. So you don't have to have a formula.
No, this is where this gets back to the eyeballing part of sometimes we have to use in budgeting.
Okay.
All right. So now going back to row 4, question 5, confirmed $5,000 contribution for fiscal year 23. There's no activity in this account before, but you've indicated that you're supposed to receive $5,000 in revenue. So you go to the fiscal year 23 column, which is column M, and you just type in negative 5,000. There is nothing in the notes that indicates that there's any corresponding expenditure to it, so you don't have to budget for an expenditure. Okay. Row 46. Row 46, does all equipment purchase means full spend for 22? Let me read that. I believe it does, but let me check. What it means is that all equipment has been purchased, which means do not expect to spend any more money in fiscal year 22. So you would look at your year to date, and your year to date would be the projected for the current year. In student notes, are we justifying our numbers? No, you don't have to add anything in the notes. I shouldn't have included that row, that column.
Professor Hunter, I have another question. Oh, I might be skipping some people in the chat, actually.
No, we've done the chat. So what's your question?
So if you look at row 27, and then the assumption says 75% spend in fiscal year 22, no increase for fiscal year 23. And I'm assuming that this means no increase from the fiscal year 22, not from the fiscal year 22 from the for the projected, not the adopted.
I would say, and when I'm looking at it, and this is a good question, when I see a read like that that says no increase, I'm assuming it's from the adopted.
From the adopted. So then I would use the fiscal year 22 adopted budget for the recommendation for fiscal year 23.
That's correct.
Okay. Got it. Thank you.
Row 48 is 50. No, it's not 59,000 for row 48. 59,000 is not the price for each mower. In this case, you've purchased 2 mowers in the current fiscal year for a total of $59,000.
So then we have to figure out how much the third one costs?
Right. In this case, you would take the 59,000, you'd divide it by 2, take that answer, and then multiply it by 3.
I think there was one other question in chat before that.
Does it matter if we use the FY adopted or FY revised? If it says, like, for example, no change, I would say focus on the FY adopted.
Okay, I have one more question.
Sure.
In row 9, when it says end of year, is that just referring to the projected for fiscal year 22?
Okay, which row again?
9.
9. Okay. So the fiscal year, so what this is saying is that the end of year, so the projection should be 5,000 less than budgeted. Your current revised budget is 35,000, it's the same as your adopted. And then, so that means it should be reduced, that your projected should be 5,000 less than 35,000.
Mm-hmm.
And then fiscal year 23 should be 5,000 more than FY 22 budgeted. So that means it'd be $5,000 more than 35,000.
All right, thank you.
Say that one more time.
Okay. So in row 9, your fiscal year 22 projected should be 5,000 less than what's currently budgeted, which is 35,000. The next column over, fiscal year 2023 recommended, should be 5,000 more than what is currently budgeted.
Which is 40,000.
Yeah.
Okay.
And James, you're right with your equation.
Professor Hunter, I have a question.
Yes.
So for row number 1, revenues should meet fiscal year 22 forecast. Does this mean that we will use the adopted?
Yes. The adopted is your forecast.
So when we multiply the year to date times 2, like when we use this formula?
If it says like if I hadn't given an assumption in that case, you could have used it in that case. But I gave you an assumption to say I was giving additional direction.
Yes, got you. Thank
If
you.
I had left it alone, you could have used that. You could have used that calculation. Okay. Are there any other questions? Okay.
Actually, I'm sorry. I have a question. I'm
Yeah,
sorry. I was
go
having
ahead.
trouble
Go ahead.
unmuting my microphone. So for, I know that, so you said for, row 4, we don't need to budget for expenditure. It's just, confirmed contribution. Would that be the same for row 23, the fuel, that we don't have to account for a corresponding revenue? It's just an expenditure?
That's correct.
Okay.
Okay, I think you already answered this, but sorry, can you
Sure.
just reiterate
No.
for 48, the row if the 59 is 1 more or 2 already?
So you've bought 2 in 22, and you're going to buy 3 in 23.
Right.
So 59,000 in 22 is the price for 2 mowers, and they're the same price.
Got
So
you.
then
Okay.
you take that, and then you use it to figure out how much a third mower would cost, and that would be your total for 23.
Perfect. Thank you.
Okay.
I have one more question.
Sure.
And I'm sorry, I'm trying to keep track of everything. So for row 37, you may have gone over this. So when it says adjust to reflect prior year performance, does that mean an average of all prior years that we have on the sheet, or just the prior year for 23? So adjust to reflect fiscal year 22 adopted.
You're adjusting the 23, you're adjusting the 22 projected and the 23 recommended to reflect basically when you're looking at 37, correct?
Yes.
So you've got 3 years of data here, and you see this is your prior year performance, these 3 years.
Yep.
Columns F through H. So what you want to do is you want to adjust both M and N to reflect what you learned from the prior year performance of these 3 years.
Okay.
If you want to do it as an average, if you just want to take an average, that's perfectly fine.
Okay. Thank you.
And there was a question asked, can you resubmit? And yes, you can resubmit.
And a question for you, Mr. Hunter, on row 47. So what it's saying is that need to account for the purchase of one more piece of equipment, but that we shouldn't be expecting any other expenditures in that area in fiscal year 23?
Yes.
Okay.
I have a question too. This is might be very silly, but if we make a pivot table that has this information in it, and then we change some things in our spreadsheet, will that go into our pivot table, or do we have to redo that?
No, what you do is that when you go back to the pivot table after you've made the adjustment, you right click in the pivot table area, a menu bar will appear and you click on refresh.
Okay.
And that adjusts the data.
Awesome. Thank you.
And if I'm correct, the pivot table is part of the homework submission. Yes, I did add, it was part of the homework submission. So if you need to resubmit with the pivot table, that's fine. Row 31, okay. Adjust to reflect prior year performance. We did discuss it. Again, this is where you kind of have to eyeball it because you only have 1 year's worth of information, but you have your current year through 6 months. You've got 1 year where stuff happened. So you would adjust that number. What I've done, just as my own guess, is I'm looking at it to reflect, I'm eyeballing that the projected for 22 is going to be 100 and the proposed for 23, the recommended for 23 is going to be 100. Because I've spent 48 so far this year, and the last year I spent any money was 87.
So would it be like a good rule of thumb to think of if you're like year to date is the number that it is, and it's like more, so like you have a situation like in row 31, that it's pretty reasonable to assume that that's going to be about half of what you're going to spend, maybe a little bit less or something like that, because you're at the halfway point, or is there just taking into account that 87 kind of rounded up to a whole number is like the year that you actually spent money, it was close to 100?
Yeah, absolutely.
Okay.
Because here's the reality: when you're sitting in a room going through budget deliberation, you typically don't have Excel open. You're looking at, I mean, some jurisdictions do, but my experience is you're looking at hard copy worksheets that have this information, and you're not able to do you're not able to do the exact equations on site. You know, some people can. I'm not one of them. So what you're trying to do is you're trying to get it into a range that makes sense. Understanding that you do want to adjust it to reflect reality, to reflect what's been done, to adjust where it's appropriate, to not just have that money sitting there where it could be used somewhere else. But at the same time, understanding that, like, for example, a lot of jurisdictions round their revenue and expenditure numbers like we do. They round them to the nearest $10. They don't do them in exact dollars, and they certainly don't use cents. Other jurisdictions round to the nearest $1,000. I don't do that because I don't have that kind of flexibility. But so you kind of have to be very this budgeting, because anything can happen. You have cost adjustments, you have differences in vendors, you know, little things can happen. You want to you can't be precise when it comes to budgeting. That's the key to understand. So it's a combination of math and a combination of math and observation. And James, yes, I will provide feedback. I will probably provide some feedback. They're going to be graded. They're going to be graded from the perspective that I want to see that all of you've gone through the exercise and have made reasonable decisions in terms of based on the information provided. I do want to see that the pivot table's done. That's more of a step-by-step process. But my main interest is to see that you've gone through the exercise and that you've made corresponding adjustments. I don't expect all the numbers to be the same. So there's no change for row one.
We don't have to are we expected to put a note in every single one or just
No,
one?
don't put it. You're not required to put notes in. You're not required.
Okay.
I should have left that column out. I should have left that column out.
Okay.
If you do, that's fine, but you're not required to.
Okay.
There's no change for row one based on the information provided. You could say that. Row 33, okay? So the challenge we have with row 33 is that there's no year-to-date spent in column K. So I've told you that to expect a 50% spend in fiscal year 22. So you would spend 50% of the budget. So you would calculate 3,000 times 50%. No change in 22. When I say that, and I say that with the other ones, I mean, it's going to be the same as the adopted from 23 should be the same as the adopted from 22.
I think that's what the issue was when there was nothing in K.
Right. Understood. Going back to row 37, we talked about this one a little earlier. For your projected and your recommended, what you're really doing is you're going to base your answer off of the average of the past 3 fiscal years. So columns F through H. Calculate the average, and that kind of gives you the number to work with for your end of year projection for 22 and your recommended for 23. Okay. So what I'm going to do now is I'm going to bring up the next lab. Which has to do with a budget demonstration. And in this case, you're actually building a new expenditure budget for a new division in a department of a jurisdiction. So the way the assignment's going to work is I'm going to give you a lot of creativity and flexibility in this one. So I don't expect you all to do the same one. I'm going to have certain expectations, but I'm not going to tell you all just fill this out like we filled out the previous one. So in this case, I'm building a communications division within the city manager's office. So what this means is I don't have any prior year information to go off of. So that's not part of this. This is a separate exercise. So what I'm going to do is I'm going to go through each of these accounts and I'm going to show you how I calculate. The first one is the salaries, and we have a full-time salary. Now, when you're doing expenditure budgeting, you have to do a lot of research to figure out. Typically, the budget is the last part of kind of developing an operational plan. So in developing an operational plan, you figure out what staff you need, what other expenses you may have, what equipment you need, and so on and so forth. And then once you have your operational plan, then you build a budget. It's important to do the operational plan first because you really need to understand what the total cost of something is going to be. You can always go back to the budget and remove something or adjust something, but the key thing is to have that operational plan so that you have a realistic plan of what you're going to do. So if somebody comes to you and says, hey, I got $100,000, I want you to create a program. That's not the right, that sometimes happens, but that's not the right way to do it. It should be, I've got a program and I would like $100,000 or 125 as the case may be. So let's first look at full-time salary. We have 3 full-time equivalent positions. FTE stands for full-time equivalent positions. We have a manager at 75, a writer at 45,000, and a videographer at 40,000. Simple addition problem equals 75,000 plus 45,000 plus 40,000. Gives us $160,000. Next, you have an intern in the part-time, 1,000 hours at 15 an hour. Multiplication equals 1,000, the number of hours, times 15, the rate per hour. Next, you have an overtime account for the videographer. So typically the rate of pay for a videographer is time and a half, for overtime is time and a half. So what I first have to do is I have to figure out what's the hourly rate for the videographer. Then I have to multiply it by time and a half, and then I got to apply it to the hours. So the first thing I do is you first of all figure out what the hourly rate is, which equals, and this is where you have to use parentheses in a formula, equals 40,000 divided by the number of hours that are considered full-time. If it's a 40-hour-a-week employee, which most jurisdictions are, some aren't, but most, for our sake, we're going to use a 40-hour-a-week employee. The number of hours per year is 2,080 hours. So I would take 40,000 and divide it by 2080. Then I multiply times 1.5, close parentheses, and then multiply that by 200. So to calculate the hourly rate, you have the annual pay, which is $40,000, divided by the number of hours worked in a year, which is 2,080, times 1.5, which is the overtime rate, the equivalent overtime rate, which is 1.5 times your regular rate. Take that rate and then you multiply it by 200, because that's the number of hours I've asked you to calculate. That gives you $5,769.23. I could go back to that field and round it up to 5,800. I'm not going to do that because I'm going to upload this example spreadsheet when we're done, and I want to leave the formula in there so that you can look at it. So I've done my salary and wages. Now I come to my benefits. And the first one is FICA. This is for Social Security and Medicare. Now there is a standard rate for calculating FICA. So you type in FICA rate in Google, FICA rate 2022. And it says here the tax rate for fiscal year 2022, the FICA tax rate for employers is 7.65%. So I know that that's my rate. I'm just going to type it in, there's a note. And it's of all salaries and wages. So FICA ends up equaling 7.65%, which is 0.0765 times, and we're going to put this in parentheses, the sum, parentheses, of all of the salary and wage cells. So C7 through C9. Close the parentheses, hit enter, and that's your FICA. Next, it's retirement. Retirement is only for full-time employees and overtime. So in this case, and it's at 10.5%. So I do another equation, which equals 10.5%, which is 0.105 times the sum of C7, comma, C9. You use a comma here to select, instead of establishing a range, you use it to select the fields that you want to use, that you want to sum together, that you want to add together. Close my parentheses, hit enter, and there's my retirement. Next up is 401k. 3% city contribution, again, only applies to full-time and overtime. So you would equal 3%, which is 0.03 times the equation we just did, which is the calculation we just did, sum C7, comma, C9, close parentheses, and gives us that. And yes, all of this information, I'll make sure to add the information about applying retirement and applying these benefits. I'll update the instructions. I'll update the notes in this example. Now you come to health insurance. So health insurance is $6,500 per full-time employee. Based on the notes, we have 3 full-time employees. So that equals 6,500 times 3. And last but not least, we have life insurance, which is 0.1% of full-time salary. So in this case, we equal 0.1%, which equals 0.001 times the full-time salary, which is cell C7, gives us our life insurance. So let me quickly come over here. Next one, we have a professional services. We're going to use a design consultant. We project that this cost is going to be $5,000 a month. There's 12 months in a year. So it equals 5,000 times 12 gives us 60,000. Now, come to our operating expenditures, and I've identified 6 operating expenditures. For the first 4, I don't have a lot of notes because this is an area. And yes, Callie, life insurance is 0.1% of full-time base pay, not overtime. That's correct. That's correct, Callie. So I have here office supplies, printing, and travel, and advertising, marketing. In some cases like this, you may not have enough information to go on, or you may have to research that on your own. So I could say I've got 3 full-time employees and an intern, and I could do my research and say that the cost in office supplies typically for full-time is $250 per full-time employee and $100 per part-time. So then I calculate. And again, using parentheses, I go 250 times 3 for the 3 full-time employees, plus 100 times 1 gets me $850. Printing, this can be a challenge because it really depends on how much communication work you're going to do. So for something like this, I could say, let's just start out with a number. Let's say I want to have at least to start off with, and I may overestimate or underestimate. But again, I'm kind of working, I'm flying blind here, but I need to put a number in. So I'm just going to put in $1,500 a month. So 1,500 equals 1,500 times 12, and that gives me $18,000. Now, during the discussion in the balancing process, this number may be changed. It could go up, it could go down. Travel, I know that there will be, this is where you have to sit down and you have to do your research again. There's like, say, I've got one conference that I want the manager to go to, and the cost of that's going to be $750. So I just type in 750, and that's the travel. Advertising and marketing. This could be for buying space on radio stations, buying internet ads, whatever the case may be, billboards and such. Yes, Darlie.
When you estimated the travel, is that just for the conference price, or is that including hotels and all that? Or
That would be total. That would be total cost in that case. Yes.
Okay.
Total cost, not just registration.
Okay.
So for advertising and marketing, in this particular example, you're looking at you would have to do some research on this, and this is why I'm going to let y'all kind of set up your own departments, do something that you're more familiar with or that you can research pretty quickly. But let's say that I knew that we wanted to have an advertising budget of about $1,000 a month. So that would equal 1,000 times 12, get you 12,000. Technical supplies, in this case, we're talking about memory cards because we're going to use memory cards with the camera system. Let's say that we think we're going to need 8 memory cards and they run $25 each. That equals 8 times 25, get you 250. Software. Software can be dealt with different ways. When you purchase software, it's an operating expense. When you sign a contract to lease software as a service, like a year contract to lease software, and some of y'all do that maybe with some software you use, it could also be treated as an obligation as a service contract. In this case, we're talking about software we buy for video editing and design. You do an estimate and a quote, that ends up being about $1,500. Software is not most software is not capital outlay. The only kind of there are a few types of software that are like your ERP system or stuff like that, but most software is an operating expense. So now we come down to obligations. This includes leases and contracts. So we have a copier lease, $250 per month. We get it off a state contract. That equals $250 times 12, $3,000. We have maintenance contracts. We're going to buy a camera, so there's going to be a camera on that at $100 a year and $150 a year combined for the other equipment we're going to buy. So that's equals 150 plus 100. Get you 250. Then you have other service contracts like Constant Contact, which is an email marketing system, music licensing, which if you use music, you have to pay for licensing for it, and other software as a service. And again, you kind of have to plan this out and think through it. I'm going to assume that those costs are going to be, say, $5,000. Now we come to computers, capital outlay. We've got 3 laptops that we need to buy, one for each employee, which are $1,850 each. And then we have a production Mac. Typically, video production is done with a Mac computer as opposed to a PC, but most governments use PCs. So that's a special purchase, and it's $3,500. So I equal parentheses 1850 times 3, parentheses, plus 3,500. It's going to cost $9,050. And then last but not least, you've got video equipment. You've got a video camera, a still camera, and a tripod. And this is going to cost about $10,000. So that gives me my total budget, which is $357,236.92. For the sake of rounding, I would probably round it to $360,000. Good question, Fidel. Would laptops on a 3-5-year lease also be considered a capital outlay? Would that be an obligation? If you're making lease payments, it's considered an obligation. You budget the way you expend it. So if you're expending it as a one-time purchase, it's a capital outlay. If it's on a capital lease, it becomes, if it's on a lease, it becomes an obligation and you pay for it as an obligation. Would travel include reimbursements such as mileage, or is that also included in 750? For this case, just think of travel as everything, including reimbursements and such. In some places, like with us, we separate out mileage reimbursement from travel that we use for conferences and schools. We're not going to get that complicated here.
Professor Hunter?
Yes.
Were you saying that if something is an obligation, then it's not part of your operating expenses?
That's correct.
Okay.
You as you see here, I've categorized each one in column A. So A is an obligation. Like, for example, service contracts for certain types of software, that would be an obligation. That's when you like lease software or pay a monthly fee for software. But when you're buying software, it's an operating expense.
Okay, thank you.
With that said, I noticed that softwares like Microsoft that used to be, you can buy it outright, and now they have the monthly subscription or the annual subscription, depending on what you're paying for it. So
right.
I guess over time, softwares like that go from being an operating expenditure to an obligation.
Yes, they do. Absolutely. Okay. And that's especially a challenge in government, because we have a lot of enterprise software where there's significant costs for the purchase, but then you have these service contracts, which you basically have to have for updates and such. And so it becomes a massive obligation. You know, legally you could get out of paying it, but then you don't have the software, it's not updated. So it is still an obligation, because it's an obligation that's critical to the operation of the jurisdiction or the given purpose of the department. Okay, are there any other questions?
I know you haven't sent out the assignment yet, but it's kind of like what you're saying it's going to be like is that you would give us a list very similar to this, but that we would kind of pick our own program to do the research to fill it in.
Right, and then I would ask you all to kind of provide an explanation for each expenditure in your notes. So you'll provide notes, and then you'll tell me, that'll help explain how you came to the expenditure amount.
Okay, cool.
Okay, so I'm going to go ahead and close it up for now. I want to thank everybody for the questions. I really appreciate it. And I look forward to seeing you all soon. Again, the assignment will go out tomorrow so that you don't have to worry about it tonight, because I know some of y'all are finishing the assignment that's due tonight. It'll be due on March 4th. These videos will be posted in the morning. if there are any other questions, and also this file, this lab example will also be available in the morning for y'all to look at, to see what I've done. And so thank y'all very much and have a good evening. I'm sorry, yes.
I have a question about the budgeting project. Are you still redoing the instructions on that as well, or do we need to start, or because it says it's pretty expensive?
Yeah, let me take a look at that as well, and I'll get back to you this week.
Okay.
I should be fine. I should be fine because I've solved all the technical problems, but I'll make sure everybody has plenty of time. If I have to change deadlines, I'll change deadlines.
All right. Thank you.
Okay. All right. Well, thank you all very much and have a good night. And I will, you'll get videos next week, and then we will meet back as a group on March 14th. Thank you all very much.